Good morning, guys. Welcome back to a new video. Today, we're going to take a look at gold from our order flow, fundamental, and sentiment perspective. And we're also going to look for the best probability. Now we can take use of the next massive buy coming up on gold. But as always, if you are new to the channel, the sub would be appreciated as I provide valuable educational content on a daily basis. If you enjoyed the video, please smash the like button for the YouTube algorithm. And as always, just let me know exactly what it is that you would like for me to cover in my next video. Now, before we get started, it's very important to understand what is a safe haven. Now, safe haven is normally a precious metal or currency that hasn't lost its value over time. So due to times of uncertainty, investors normally run to gold, Japanese yen, as well as the Swiss franc, so that they can reduce their losses based off the stock market, based on the stock market portfolio that might have crashed because of all of this stuff that's going on at the moment. So I'm going to give you guys a full breakdown on the situation that we got on gold and how we can take use of this opportunity going further as well. Now, as always, we're going to start with the technical analysis. Now technical analysis. So starting on the monthly time frame, what do you have? Now, firstly, we can see how gold had printed this very important structure. Now, last month, we obviously saw gold reacting very aggressively because that's when the whole war between Ukraine, well, that's where the tension started building up and the market started reacting to that as well. Gold then eventually broke above that level last month, and we can definitely expect the continuation to the upside for the market to go and hit that all-time high. We can also see how the market printed this massive impulse. After an impulse, you expect a correction, and that is exactly what we got. And after that, you expect a continuation to the upside. Firstly, if you take our Fibonacci there from the low to the high, we can firstly see how gold tested and rejected the 78.6. Now, if you want to measure that target level, you need to take your Fibonacci on the correction. And we can firstly see here that we've got a massive target here of 2,185 US dollars per ounce of gold, and we're going to use that as a long-term take profit. But for the short term, we are retail traders, so we want to make sure that we get out of the market just by making enough money. So here on the weekly time frame, it's quite clear. Now here on the weekly time frame, we can see how the market printed this double top. The market then, you can see how the market is about to break above that level. So from here, we can definitely expect that continuation to the upside. Now, moving on to the daily time frame, what do we have now from a daily perspective? We can firstly see how the market had stuck within this consolidation phase. And the reason why the market was stuck into this consolidation phase is because Russia and Ukraine was going to meet yesterday, and they were going to discuss how they can, cease fire and come to an agreement. But we're going to get to the fundamental data right now. So from exactly where gold is now, what we are going to use is we're going to use a short-term target for the market. So for those of you that doesn't have any patience to hold for a long-term trade, basically you can use these highs as a target level because you can definitely expect that market to go and fill in that wick. That will be the alternative target. I'm currently holding two buy positions in gold. The one was taken at this level. The other one was taken at that level as well. When I gave it to you guys out on my Instagram live, and I said, go out there and buy gold. So we can see over here that the market had now broken out of that consolidation phase there as well. Now, the way that we are going to approach gold over here as well. So the way that we are going to approach gold over here is, firstly, we can see how the market is currently trading above this level of resistance. Now, there's two ways to approach the situation. The market can take off from exactly where it is now and go and test that levels as well. Alternatively, we might get a breakout, we might get an impulse correction and then get the next impulse there as well. So if you are the risky kind of guy, you are more than happy to just go in there and buy gold if you do not currently have a position open on gold. Next thing we are going to do is we're going to look at some fundamental data to back up the theory even more. Firstly, we can see this article from Reuters comes out and say gold prices eases as after Russia and Ukraine said that they were going to meet and they were going to talk, right? So we can firstly see gold prices edged lower on Tuesday after Russia and Ukraine officials held their first round of ceasefire talks overnight, dampening demand for safe haven bullion. Now, in simple terms, what that means basically is that gold was very bullish in February. Then the news came out and they said, you know what, Russia and Ukraine has actually decided that they're going to meet, but nobody knows what the outcome was. Did they decide that they're going to stop talking about bombing each other? And then investors were like, okay, let's first hold here. And that's why we got that consolidation phase there as well. So markets were like, wait, let's wait first and see what happens, because even investors are reactive and not predictive. And that is exactly what we need to be as well. So the markets were holding on. And then guess what happened? Next thing you know, Wall Street Journal comes out and says that Ukraine failed to agree on ceasefire as Moscow selling kills civilians. So the news came out this morning, guys, that there is nothing happening. Yesterday, we saw Russia was dropping bombs on Ukraine, left, right, and center. As a result of that, gold is going to the moon. You can expect that to happen as well. It's just about making sure that you get into the market at the right time. Also, the prices of oil is going to skyrocket, hurting consumers at the pump even more as well. Now we can see over here, the article reads from the Wall Street Journal. It says here, Ukraine, talks between Russia and Ukraine on a potential ceasefire ended with no deal on Monday, and Moscow intensified its assault, killing at least 10 civilians in a selling attack on the residential neighborhood in the eastern city of Kharkiv, just ignore me if I'm pronouncing it wrong, and pursuing efforts to seize the capital, Kyiv. Now, I've been saying this for such a long time now that Mr. Putin, I'm going to call him Mr. Putin just so that he doesn't come to me, is going to invade and for as long as this is going to go on, stock markets will continue to plummet. Gold is going to the, as I've been saying this for such a long time, gold is going to the moon. If you go watch my other videos, you'll see that I said that gold is going to the moon, and that is exactly what is going to happen. This morning, I wake up to an article that reads, as Russian bombs turns Kyiv into a war zone, residents scramble to escape. Now, things are getting crazy currently in Ukraine. And Putin came out on Sunday and he has said that, I think it was on Friday or Sunday, he said that he has got his nuclear troops on a high alert. Now, if you don't know what that means, ladies and gentlemen, I suggest you take out some time and go understand what that means. Putin is not playing with Ukraine. And the more they attack Ukraine, the more gold is going to increase, the more oil is going to increase, and the more the more the Dow Jones, the Nasdaq 100, as well as the S&P 500, including any currency pair trading against the JPY, is going to fall to the floor. I promise you that is what's going to happen. Yes, now let's move on. Now, this article comes from CNBC, and we had some people interview, but the headline reads, gold demand is rising. Why? Because almost every investor is buying gold. There was also an article that came out. That article read, I just want to make sure, well, I want to read it to you guys because I saved it here on my phone as well, so that I want to make sure I provide you guys with the correct, with the accurate information as well. And this article basically read that, where is it now? Where do we find it now? But the article had read that, I think Russia, had said that, well, the Bank of Russia confirmed that they were going to invest, or they were going to purchase more gold, which gave us an even further confirmation that we can expect that gold prices to surge. Now, let's go over to the commitment of traders report. So this tells us what the smart money is doing in the market. And just looking by the long positions that we have here, we can see based on last week's report, they added 36,827 buying positions, ladies and gentlemen. They already also added 7,000. We don't care if they added 7,000 selling positions. Look at the difference between the long, and so that's the buys, and the sell positions. 350,000 buying positions is what the smart money as in the market. Now let's go and have a look at what retail traders are currently doing in the market as well. So if you go and look at gold over here, we can see here that we have over 73% of retail traders that are long and 27% of them are short. Well, for the first time, retail traders are making the correct decision. Once again, guys, that is all the data that we require to call. And you can just see from the time I spoke, gold has just moved to the upside. So that is all the news that is currently happening. And I'm telling you guys now, you can expect things to get worse for the markets. And because of that, you can definitely make a lot of money off of this as well. Now, I want to say thank you so much for your time and for your effort and for watching the video till here. If you enjoyed the video, please smash the like button for the YouTube algorithm. And as always, cheers for ears.